Hello and welcome to this week's Property Box Weekly News with me, Simon Evison. The EU referendum has certainly shaken the economy and put the country on edge. A raft of resignations in the Labour Party and the government under pressure in Westminster makes for a very uncertain time ahead. The Brexiters were taken by surprise with the Prime Minister's resignation announcement, and there looks like a stalemate will dominate proceedings over the coming months. Where does this leave property investors, and what then are their prospects? With the drop in the value of the pound, overseas investors can certainly take advantage of the situation. Couple that with a soft market and there is the possibility of 10 to 20% saving on property. Anthony Humpage, CEO of Legacy Education Alliance, made this comment. The UK remains one, if not the best market in the world in which to be a property investor. And for overseas investors, market reaction to Brexit and the resultant drop in the value of the pound sterling make UK property available at an incredible and likely short-lived discount. If there is a flood of overseas investors into the UK, this could put huge pressure on UK home ownership, and the Chancellor will be under pressure to relax or even retract new and impending tax changes the investor has been hardest hit by. A major impact on the property market in a time of economic uncertainty is that the Bank of England often reduces interest rates. There are rumours a base rate cut to zero might become a reality. The bank's governor, Mark Carney, did go some way to reassure investors and the financial market by saying that he will not hesitate to take any additional measures required. These measures include the rumoured cut. Some investors are of the opinion that the base rate will stay the same for the time being. Great to be borrowing, not so great to be saving. In the mortgage market, buy-to-let lenders are talking about reducing their fees and rates in order to attract landlords. This makes the cost of borrowing even better. The immediate implication is that true money in, money out deals are going to become more readily available. The shortfall in housing has been a problem for many years and is not going to change due to the low rate of building. EU citizens currently resident in the UK are likely to be granted indefinite leave to remain once the so-called Brexit happens, as the Leave campaign did not call for them to be deported. It's also possible there will be a rush to enter the UK before new restrictions come into force, therefore putting increased pressure on demand for housing, which will of course benefit the buy-to-let investor looking to maintain and grow their portfolio. There is a general feeling that the underlying strengths of the UK economy remain in place, and ultimately real estate is an investment that works best for those who pursue long-term goals. Ian Edwards, COO of Legacy Education, made this comment. Whilst these are uncertain times, the reality is that when others are fearful or stagnant, that's the time to move forward. Those with the knowledge, self-belief and drive will make that move. Although this is an uncertain time, educated property investors are entering a buy phase. It was Warren Buffett who said that he always wants prices to be falling when he's a net purchaser. Stagnant prices, uncertain economy and interest rates remaining low means there's a real opportunity to pick up investment property at great prices over the coming months. Legacy coach and mentor Sean Thompson added to this by saying, make sure the properties stack up, make good cash flow now and be prepared to hold for the long term. That's all from me this week. We'll be following this story up in later editions. For now, thanks for tuning in. Goodbye.